I mean, the PI market runs in cycles, and it's a very cycle-based industry. And at the moment, we're in what's known as a hard cycle. And I think we're at sort of at the start to the midway through the hard cycle. I still think there's a while to go. And that's where we're currently at. I suppose this hard cycle has been driven by a number of things. Obviously, claims activity is what drives these things first and foremost, but there's been some other items that have driven this particular hard cycle, and it's sort of the imperfect storm that we've found ourselves in. I mean, first you had the Hayne Royal Commission and the findings out of that. And obviously that highlighted vertical integration, fee for no service, items such as that, also enhanced the regulator's focus on the industry, which concerns insurers. The Lloyd's market over in London has been a big player in providing capacity to financial planners for years. Probably a year and a half to 2 years ago, the Lloyd's head office did a thematic review or undertook a thematic review of each of their syndicates. The findings of that were that international professional indemnity insurance, which does include Australia, was their second biggest loss leader globally. The remediation plan that was a result of this review was that each syndicate that were providing capacity in the classes that were loss leading for Lloyd's needed to put together a business plan and submit that to them and get their approval. That business plan was more of a remediation plan to show them how they could continue to write this business profitably for the next few years. And as some of the items that were covered in those remediation plans, some of the outcomes of those remediation plans were Lloyd syndicates that were providing PI had to reduce their limits, so reduce the level of capacity that they were putting out, increase their excesses, and obviously increase premiums. If they were unable to justify to Lloyd's that they could continue to write this business and didn't get their business plan signed off, they would ultimately have to go into runoff. And over the past 24 months, more recently the last 12 months, we've seen a number of syndicates that were quite active in this space in providing capacity to financial planners and investment groups remove themselves and go into runoff and no longer are an option. And the third point and the most recent point is COVID. And COVID in the short term is okay, but in the long term and the uncertainty that it creates is what insurers and what underwriters are concerned about. And it's sort of caused us to see an even further shift in the market in the last 2 months. Obviously, when all the stimulus packages are removed in September and we understand where the economy sits, if there is a significant economic downturn, historically that normally results in claims and increased claims and notifications of claims against advisors because people have lost money on their investments. So that is what insurers are concerned about. It's the uncertainty that a significant economic downturn brings. And then another item is AFCA and obviously the increase in complaints and matters that AFCA are handling. And the changes in AFCA and, you know, the levels of claims and settlements that they can now handle. I mean, they can now handle settlements up to $500,000, whereas previously it was a lot less than that. So that is also creating some concern for insurers and causing them to, you know, rethink their underwriting strategies around this sector and around this profession.